Good morning, good afternoon, and good evening, wherever you are in your beautiful country. This is a new episode of PairTrade Finder PRO where we are analyzing the pair EXPE, which are the tickers for Expedia and Marriott, both in the travel and lodging subsector. This occasion, we are gonna focus on how to protect our P&L curve when we take a trade that, for whatever reason, goes against us. So I'm gonna tell you some tips that I use on how to manage this situation and how to set up the software and leverage the tools that it provides. But be, before we do that, let's go initially to our cheat sheet. I will cover that slightly fast than normally in order to focus ourselves in the second part of the video with those already mentioned management tips. Well, so what do we begin with always exactly? We always check news. So the first filter is go and try to see if there is something that in terms of structural impact could have triggered the signal. And what we observe is that around the 17th of April, in the case of Marriott, there's no anything that I can see apart from some good opinions on the ticker itself, stating that maybe it's a good stock to invest in. Expedia on the 17th of April, again, nothing that I can see that is big enough. So in terms of news, we could say that this filter is okay. Earning dates and dividend dates, there is a serious problem here. Expedia was presenting results 2nd of May and Marriott 4th of May. If the signal was triggered on the 17th of April, there's no time enough. There's no these 30 days that we ask let the trade run. So clearly this is a red. Dividends happen something similar because the dividend in Marriott is on the 13th of May and it's in the short leg, so it's against us. Both are red. In terms of momentum, we see that the moving average in the ratio chart is pretty flat. So we are okay in terms of momentum. That is a green. The ratio chart, we can analyze that it is in a resistance level in terms of the curve and when the signal was triggered. It is also something that you can observe here in the standard deviation, in the plus minus chart. This is a support. I don't know if I say resistance, it's a support level. Clearly, where this chart is telling us that it's a good place to get in the trade. So that is a green. The standard deviation chart and percentage from mean is also filtering the fact that those events with a higher standard deviation of plus minus 3.5 are probably being affected by an event. And that is the case of this pair, because we are at 3.47, but we already made our homework, we check news, and what we see is that we came to this standard deviation level organically in the days before, so it was not all of a sudden. Hence, that is a green. RSI it's 27, so it's below 30, so that is a green. Also, there's no divergence in terms of RSI. but being below 30, we consider that a green. Correlation and co-integration in the backtest, it is 82 and 81.2. So these are two parameters that even if the co-integration slightly below 0.88, which is our limit, the combination of both, I think, is good enough in order to mark both boxes as a green. Volatility. Volatility was 1.8, slightly more than 1.8, well below the 2.5, which is the first threshold we have in terms of volatility, so this is a green. CAGR and drawdown. CAGR and drawdown in the backtest. CAGR is 6.5 and drawdown is almost 12. So drawdown is still below our limit, which is 20, that's fine, but we like to see CAGR higher than drawdown, and this is not the case, so this is why I'm marking this as a yellow. Now, once we see that, we may conclude that this trade, by any means, we would have taken it because there is a serious issue here in the earning dates. But let's imagine, let's suppose, for the sake of learning the management, the money management tips, that we would have taken the trade. And let's see what happened after that. So after 4 days, the trade went to positive, but after that immediately it began to deteriorate and deteriorate. And in the 2nd of May, which is the earning release of one of the tickers, EXPE, you get a serious hit. And on the 4th, you have another big hit. So this is what happens when you don't consider so relevant aspects as the earning dates. And how to protect yourself from these occasions, from this instance? Well, 3 tips I want to explain, and if you find it useful, feel free to incorporate it to your trading. Number 1 is a stop loss in time management. There is what we call a time stop that you can set up in the security groups. You go to the groups where your pair belongs to, and you see here that you can specify the number of days you're gonna stay in the trade as a maximum. After this number of days, the system will send you an email stating that you have go further and you should exit the trade. That's the first time stop that we use. Second stop loss that we use, which we find very useful, I would say it's not really a stop loss, it's more a take profit parameter, which is the rule of 1.7 standard deviation. 1.7 standard deviation rules, what says is that from the entry level 3.47, I just subtract the number 1.7 and I get 1.77. So the rule says that at 1.77 my journey has ended and I have to exit. So I have trade runs of 1.7 standard deviation, and that is the maximum I want to code. This works pretty well because when the pairs go in positive, you can get pretty fast trades if you apply that rule and don't get to situations that last forever and you hit these severe reds. In order to explain the 2 remaining tips, let me use this Excel file to structure properly the concept that I have introduced and some others that are going to help me explaining what is left. So what I have here is a column with the name of my broker, the different pairs I am in at this point, the standard deviation entry when the signal was triggered by the software, and also what is the standard deviation exit target based on the 1.7 rule. Likewise, I want to introduce also this column here, which is the midpoint in between these two values, because this is 50% of my journey in the trade. And what I would like to do is when I hit this number here, I'm going to place a trailing stop in the pair. Let me show you how. In a way that, for example, in our case, EXPE, this midpoint happened at 2.62, which if you go here to the history, you see that that happened on the 21st of April. So at this point, I should have set up this max loss field with a trailing stop of minus 500 and mark the alerts field in order that the software send me an email when I reach this point. Why? Well, it's very simple. I want to make sure that if my trade goes wrong by remaining part of the trouble, I want to be advised that maybe I should take action. So when this trade begins to deteriorate and hits the severe loss on the 2nd of May, I should have before that, I should have received, because of this setup here, an alert that something really wrong is going on and I should leave the trade. I should exit immediately. So that is a trailing stop that you can argue maybe this figure is too high or too small, but that really only depends on your trading strategy. You maybe can do it even shorter, but you have to take into consideration that the shorter you place the number here, the more frequently you're gonna hit the stop. And very frequent stops is money for the broker and not for your P&L. And that we don't want that to happen. Another thing that I have already placed in this file is a tracking of the different earnings date of each and every leg of the different pairs. The reason is because if for whatever reason my trade goes beyond the 30 days maximum that I have tried to filter previously with the cheat sheet, I want to have a visualization on whether I'm gonna approaching the earnings date, because if I am too close to the earning date, I will immediately exit. So let me tell you how this works. For example, this cell here, it does subtract this date, which is the earnings date of PFE, from today's date. So from nowadays date, in a way that if the result is higher than 2, so I'm still far away more than 2 days from the earnings date, then this still is okay. But if for whatever reason I am close to that earning date, less than 2 days, then the text alarm will appear here. So I still have 2 days in order to take action. Normally exit the trade, because we don't want to be in a trade when earnings release happens with the ticker. That is really, really risky. Or maybe, if your strategy allows it, hedge the position. I have left on purpose in our pair EXPE how it reads because these are still the old dates when the earnings date happened in last quarter. Just in order that you see how this thing change. So getting back to our history, what you see is that this continue evolving and it began to deteriorate quite heavily. At least with a minus 500 trailing stop, we wouldn't go all the way to this severe hit. And finally, what happens when I have a trade that has gone in my favor? I have made a very good profit. Let's take this example, BL with a standard deviation of 1.35 that happens to be the exit point based on the 1.7 rule. Well, 95% of the occasions what I do is just exit, get the money in my pocket, and get a solid and smooth, profitable P&L. But it's true that there are some occasions, maybe 5% or less, where I see some specific technical structures or market situation or events that I see that convince me that maybe it's worth to wait a little bit more until this standard deviation goes to 1. If I am to go that path, what I do is I place here another trailing stop, which is half of what I have already win. I mark it in the max loss column, check the alerts field, and if the trade reverts back and begins to deteriorate from 900 from a 900 winner, then I will get an alarm and then exit immediately because it is preferable to at least keep half of the profit rather to let it go and maybe lose everything, which is very, very tough to sustain psychologically. Going from 900 to maybe a negative, that is too tough. So that's how I manage those special occasions where I will leave the trade go until standard deviation equals 1. And that's it. So I hope you find this useful. Please feel free to use all these tips if you think those are valuable to you. And with that, the only remaining thing on my side is wish you a very good trading and see you in the next episode.